Welcome to Looking at the Markets with David Modell. Today I wanted to discuss with you the gold to silver ratio. I want to tell you what it is and how you could possibly use it as an indicator if you're a buyer or seller of gold or silver or both. So let's take a look at it. And the website I'm using right now, this is a chart from macrotrends.net. Wanted to give them credit. All right, so this is a chart showing all the way back from the late 1990s all the way through now. And this is the gold to silver ratio. Now, first of all, what is the gold to silver ratio? Very simply, they just take the price of an ounce of gold and divide it by the price of an ounce of silver. In other words, how much silver would it take to buy an ounce of gold? All right. Or to put it another way, how much more expensive is gold compared to silver? And as you can see, the mean or average is around 50 or so. And when it gets up to around 80, then gold is much more expensive than silver. And when it gets down to around 30, silver is much more expensive than gold. And you might actually notice that at least since the late 1990s, there has been what you might call a resistance level here. It tends to go up to around 80 and then mean revert or go back down to the average of around 50. Goes up to around 80, mean reverts, goes down to around 30 or so. I don't know if you would call that support level necessarily, because it only seems to have gone down there once on this chart. But it went down to around the low 30s, and then it mean reverted or went back to the average of around 50, back up to 80, a little bit of mean reversion, and now it's back up to around 80 or so again, which seems to be a resistance level. Now, there are no guarantees in the stock market, of course, or the commodities market. Just because it has bounced down from 80 three times here, of course it could go higher than 80. It could go up to 90, could go up to the high 90s, all right? There's no guarantees, all right? Just because it bounced off of the low 30s, that doesn't mean that it can't go below 30. Of course it could go below 30, all right? So the mean or average is around, let's say, around 50 or so. So I tend to believe in mean reversion. And there are no guarantees, okay? But I tend to believe that when an indicator goes way too high, it usually at some point will come back to the average, all right, or the mean. That's called mean reversion. Or when it goes too low, it'll probably at some point come back to the mean or average. And so when the gold to silver ratio goes up around to the 80 level, which is where it's at right now, actually, as I'm making this video, then if you have gold and silver, you may want to consider selling some of your gold and buying some silver. You might just want to consider it. You have to make your own decisions. I cannot tell you what to do, but it's something to think about. Because when it's up here, that means that gold is way, way, way more expensive than silver, okay? And when it's down here, you might want to consider selling some of your silver and buying some gold, because when the gold to silver ratio is down here, that means that silver is way, way, way more expensive than gold, okay? Now, just because the gold to silver ratio is way up here around 80, yes, that means that gold is way more expensive than silver. That doesn't mean that gold is expensive. Just means it's more expensive than silver, okay? It might be cheap compared to palladium or platinum or the stock market or whatever, or the dollar or whatever. I'm just saying if you have both gold and silver, you might want to consider lightening up on your gold holdings and get some silver instead, all right, when it's way up here. And the opposite is true if it goes way, way down. You may want to lighten up on your silver holdings and focus more on buying gold when it's down here. All right, so if you want to take on a little more risk, when it's way up here and you believe it's going to mean revert back to 50 or so, the gold-silver ratio, then you could, and this is risky, be aware, okay, this is a risky strategy, you could actually buy silver and short the same amount, the same dollar amount of gold, all right? I'll repeat that. When it's up here, you might consider, for example, let's say it's up here or up here, up here, up here. When the gold to silver ratio is really high, you might consider, as a very risky strategy, okay, but you might consider going long or buying silver and shorting the same dollar amount of gold because you believe that it's going to mean revert back to 50. which would mean that relatively speaking, the price of gold would go down compared to silver, or the price of silver would go up compared to gold. All right. When it's down here, when the indicator is down here, the gold to silver ratio, again, this is risky, but you could try, if you want to, you could try going long gold or buying gold and shorting the same dollar amount or an equivalent dollar amount of silver, because you believe that eventually the gold to silver ratio is going to mean revert back to around 50 or so, in which case, relatively speaking, the price of gold would go up compared to silver, and the price of silver would go down compared to the price of gold. All right, that's a riskier strategy, but it could work if you do it very carefully, very cautiously, take small position sizes, and mitigate or limit your risk at all times. But the safer way to go probably would just be, when it goes way up here, maybe just buy, if you already have both, maybe just unload or sell some of your gold and buy more silver. Always in small amounts, and always don't take on any risk you cannot afford to lose. All right, so that is the gold to silver ratio. It's something you want to check on a regular basis, especially if you're into trading gold or investing in gold or silver. It's an indicator, one of many that you can use. All right. So if you'd like some help with trading, investing, commodities, stocks, options, whatever it is, you can contact me at any time. My name is David Modell, and my email address is davidmodell@gmail.com. If you found this video helpful, please give it a like on YouTube, give it a thumbs up, and leave a comment, and subscribe to my YouTube channel if you have not done that already. And also, if you really want to support my channel, what you can do is you can click on and give thumbs up to my sponsored or promotional videos, where you may see me promoting an ICO or a penny stock or a small company, a mining company, gold, silver, that kind of thing. And that's a way, it costs you nothing except a small amount of your time and effort to support my channel by doing that. All right, thanks a lot. I appreciate it, and I'll talk to you again really soon.